Warm welcome, ladies and gentlemen. Good evening from Mark Laudy, welcoming one and all to our investor seminar on advancing your rights as a shareholder. The first thing I need to do is to show you our QR code in which we invite your comments, invite your questions, and also invite you to take part in our various polls this evening. So please make sure that you snap this QR code and contribute. We're here to talk about advancing your rights as a shareholder. We'll be covering in the next 20 minutes what your rights are, how to get your rights respected, and we'll walk through some of the tactical things that you can do, how to ask questions, where to ask questions, and how to get the answers that you're looking for as an investor. Now, to kick us off, I'd also like to welcome here on the show. We have 4 guests answering your questions this evening. June Sim, Managing Director and Head of Listing Compliance at SGX RegCo. Welcome to you, June. We're also joined by the Vice Chairman of the Singapore Institute of Directors, Adrian Chan. He's also Head of Corporate and Senior Partner at Lee & Lee. Welcome to you, Adrian. From SIAS, the Securities Investors Association, the hosts of our event this evening, we have Private Investor and Honorary Secretary, Mr. Ang Hao Yao. Hello again, Hao Yao, welcome. And Partner at Kennedy's Legal Solutions and Assistant Honorary Secretary at SIAS, Robson Lee. Thank you, one and all, for joining us this evening. It's great to have you with us again for another SIAS Investor Night. So let's kick off with the what you can do to advance your shareholder rights. And perhaps on that end, June, maybe you can kick us off and give us the North Star, the ground zero from a regulatory perspective.
Hi, everyone. So from a shareholder's perspective, SGX has given a lot of guidance in the past in relation to general meetings, including AGM. So the starting point must always be that investors, you must attend, right? General meetings, AGM and EGM. And these are, as you know, important avenues for you to ask questions that you have pertaining to the matters that are to be approved at the general meeting. So from an investor's perspective, you know, we as regulators would look at announcements, right? Announcements made by your investee companies. And these announcements would contain material updates to the business of the listed companies, any as well as financial statements. So the first point is engaging your investee company's board of directors very closely at general meetings, including AGM. And of course, it is, I can't help emphasize the need for shareholders to look at SGX Net announcement, right? Because that's the mode of disseminating information. And apart from SGX Net announcement, I also wanted to urge investors to look at the questions that we regulators ask, right? Whatever questions that we ask of issuers board, the responses will be made public, meaning they will be released via SGXNet, reproducing the questions asked by regulators. And these questions can apply to all sorts of transactions apart from financial statements, which is your interim financial statements, including quarterly reporting, if the issue is subject to quarterly reporting. There are also questions that we ask on the not so much on the commercial merits of a transaction, but on transactions in particular, if there are reasons for us to be concerned about, for example, how board evaluate and enter into a commercial transaction, the basis for determining or arriving at a consideration. So questions from regulators, please pay attention. Right.
But then again, June, I mean, if the regulator is already asking questions, shouldn't the companies proactively answer them? What role do shareholders have in reading and then perhaps re-asking these questions?
Okay, so if it is about financial statements, I'm quite sure investors are very familiar with our reporting format. There is certain information that is prescribed for financial statements. So regulators would ask when there are, for example, material variance, right, in the financial statements, meaning if there's a fluctuation in the previous corresponding period, then we would ask those questions. But sometimes investors have their own, given their own investment profile, they might be concerned about certain business activities, right? So the rules cannot be so prescriptive, given that all businesses are different and you're exposed to different risks. So while the rules can only, to a certain extent, regulate the disclosures in terms of review, in terms of making sure that the financial obligations are very clear, investors would have to look at it very carefully, because apart from the financial reporting requirements, if you notice, sometimes we do ask questions when we look at receivables, right? You know, how come you're not collecting, or you have revenue increasing, but your inventory, you know, in terms of inventory, there isn't much movement. So these are very investor specific questions that we ask, but we can't cover all grounds, right? It all depends on your own investment risk appetite and profile in terms of the information that you want from your investee companies.
Right. And I guess, Hao Yao, that brings us to not only the rights of shareholders, but also their responsibilities, which SIAS, of course, is very keen to promote. Can you walk us through in practice then what June is saying? You know, how should shareholders then raise these issues with the board, with the chairman at the AGM?
Well, as June has said that we should attend AGMs, but of course the preparation for the AGM is also important. And as June says, you have to follow all the announcements and such, but not just regulatory disclosures, but also follow up on the company through their website, their products and services, and as well as the industry. And you can get industry news from, you know, either local news, Business Times, or even through Bloomberg, Reuters, and others. Do your homework. I mean, we got to also know what are relevant laws and rules so that the company has to follow, so that we can cite them. And if they are not following them, then we can also point that out. So Companies Act, rules that companies have followed, like SGX listing rules, there's the Corporate Governance Code. You know, the Corporate Governance Code talks about how board, what their roles are, the composition, the responsibilities of, say, the nominating committee and the remuneration committee. And so that will give an understanding of how the company works internally. And only when you know how companies work internally are you able to then ask the right questions. Another area is maybe accounting, learn some basic accounting. And June mentioned things like receivables and such. And familiarize yourself with how annual reports are laid out, you know, and how circulars are also laid out. And I think it's just about experience, reading through as many as possible. But aside from just AGMs and you know, learning rules around that, I think advocacy can have a broader meaning. In other words, learn about investing, attend investor and corporate governance conferences and seminars. And you can even ask questions there, not just at the AGM. You know, those are also learning opportunities. You can even attend director classes. So, for example, I'm not this listed company director, but I also attend listed company director classes. You know, this also gives an insight into how companies are run. So you have to understand both sides, not only the investor side, but the corporate side. And even if you can't join a listed company board, like, well, I'm not listed company board, you can join non-profit boards, association boards, and they'll also give you an experience how organizations are being run and so forth. So there's a lot of different avenues and areas to improve your knowledge, and that's one of the ways to advance your rights, because you've got to know what your rights are, and it's important to know how things operate as well. So another area, for example, you can advocate in through letters. I've been investing about 30 years, so I've published maybe about 100 letters in the local press and magazines, mostly on corporate governance. So that's also one way, because you advocate positions, but you also learn along the way, because when you write, then you've got to know all the regulations and rules and such before you can put the pen to paper. And then among yourselves as well. I mean, I form my own investment groups, investor groups, chat group, coffee groups, get together, talk about ideas. Either you publish them or bring them to SIAS, or even SGX, or even volunteer at SIAS.
Right. It's funny, Howie. I've known you for so many years, and as you say, you've been investing for 30 years, but you don't look a day older than the day that I met you. Nodding vigorously.
Another wonderful thing about investing.
Right, it keeps you young. Nodding vigorously when you said take part in investor courses was Adrian Chan. Adrian, SID, of course, provides such courses. What's the 20-second pitch then for, being a retail investor, but actually getting a feel for what it's like on the other side of the table?
Yeah, so I think the best form of engagement is where you try to put yourself in the shoes of the person you're trying to engage, and know what the levers are, how best to get information seeking, is to empathize with the person and pitch it in a way that he will find least painful to share that with you. So I know some shareholders, for example, feel that they like to spring surprises on the board at AGMs and ask all these esoteric questions that frankly no one would really know. They need to go and check, right? And so they're not happy if the CEO or the chairman says, let's check and get back to you. So it's always good that if you are genuinely wanting to get clarification, my recommendation is to write in early and have the company publish that information on its website, and then you can actually dissect and analyze its responses so that you can be better armed when you go to the AGM to ask more insightful questions and for additional clarifications to be given. But yes. Mark, but going back to your questions, I think all shareholders should attend courses so that they can see both perspectives, right? So, for example, you don't need to be a director to attend SID courses. So, for example, please attend and actually know the rules so that you are better prepared to put directors in their place when it's called for.
Yes. Well, I guess one of the, I realize this might be an esoteric question, but Adrian, what is an example of an esoteric question which boards of directors can't possibly be expected to know the answers to? In your years of experience, do you have any vivid examples?
No, I mean, if you drill down into specifics, so for example, if you're asking a listed conglomerate and you're saying, about your investment in Timbuktu, and then you ask some really minute question about what's happening in Timbuktu, the CEO is going to say, I don't have the head of the business unit in Timbuktu here at the meeting now, but I can find out for you. So if you are asking very relevant questions, big picture questions, I'm sure you get answers that you want. Yes. But if you want to, if the objective is to catch people out, then that's not very productive. That was my point, Mark.
Having said that, have you been at an AGM? I'm sure you've seen this before, where the shareholder has done the right thing, right? They've done exactly what Robson and Hao Yao and everybody at SIAS preaches, and that is read the annual report. The shareholder then gets up, takes to the microphone, opens at page, pick a random number, 347, and says, it says here in the third table from the left, it says the number 23. Shouldn't that be the... I mean, you could say that, if you're actually doing your homework, then the board should do too.
I think if you are referring to information and annual report, there should be an answer ready for you. I fully agree. So if on page 300, by the way, annual reports shouldn't go to 300 over pages. So I think knuckles should be wrapped if they can't be more succinct, right? But if you're asking for clarifications, the CFO reading the financial statements should have an answer for you. So I would say to the CFO that cannot answer financial related questions on the financial statements and annual report.
Okay, now Robson, come on in on this, because we started out to what and how to advance your rights as a shareholder, but because of the environment that we're in, of one where the exchange doesn't make investment decisions on your behalf, it's caveat emptor, it's up to you as an investor to figure that out. Clearly, those rights are also associated with responsibilities, Robson. You're on mute, sir.
One should not invest blindly based on fad or based on a rumor, or just simply buying on hope and holding in greed and selling in fear. At the end of the day, if you were to buy a car or buy a house, you would have done some reading about what are you buying. You will continuously monitor what's the what's happening, and I think nothing is more important than to emphasize that when you have a substantial stake in a company, whether you're 5% or 1% or less than that, don't put all your eggs in one basket. And if you have substantial commitment or investment in a company, do keep a constant eye on what the company announces on SGXNet. I think that's something which June has emphasized. So if there were questions, there were queries raised, or there were letters written, whether by the media or questions from the regulator and requiring a response to be published, I think you should keep an eye and closely look at and scrutinize the responses from the company, and not wait till the AGM, because by then it could be quite late, because an AGM is only once a year. So of course, at the end of the day, you are a minority. You have the right to sell. You have the right to buy more. No one is responsible for your investment decision. I think no regulator in the world can safeguard, and therefore you must invest prudently, take care of the top side and your bottom side and your bottom line. Know what is the threshold of pain whereby you think you're making a loss. You should sell, or if you make a certain gain, well, you might want to realize your investment, but ultimately be responsible for your investment decision, and not wait till the AGM, because it could be quite late. And at the end of the day, of course, if you have been constantly following the financials, and the company announces quarterly financials, I think it's a very good means to keep yourself updated. If there were unusual trading, so every day, if let's say you have invested in 10 counters, I'm not sure how many counters Hao has invested, you should keep a lookout for announcements on a daily basis. Put it as part of your discipline. You have invested in 10 counters, look at all the announcements, anything unusual, or the press has reported something about it, read it and think about it and decide whether should you sell, should you buy more, or ask questions. Not just at the AGM, but you could write in and raise an issue on the forum page, or even write to SIAS or to SGX. I'm sure they would also welcome your feedback.
Oh,
but ultimately, you well, if you write and there is a point and it's not a esoteric question, or it's not something that is flippant or knee-jerk, then I'm sure if you have made a point, I think these points are certainly, I mean, if you write in the press and you have made a case, I'm sure someone will respond to it, whether SIAS or otherwise. But I think you got to be vigilant when you invest, and you got to know what you are investing and whether is it worthwhile to hold on till the next AGM.
Yes. Well, June, that brings us back full circle to you. As Robson says, don't leave it just for the AGM. But you started out this evening saying that, please attend the AGM. Experience, are there still shareholders who absolutely have no interest at all in attending the AGM? Is there still an issue, attendance?
I don't think so, but shareholders can, even if they don't attend the AGM or general meetings, they could still ask questions in advance. That goes back to what Adrian has mentioned earlier, right? You go through the resolutions to be tabled at the general meetings, and you can ask the questions in advance so that the company's responses are released before the last date for lodgement of the proxy forms. So I don't attend AGMs. I do attend SGX AGM,
Right.
and I can say for sure that the investors are very familiar with our financials, and it is not uncommon for investors to turn to a particular note on page whatever of the annual report and ask questions of this of the board or the CFO.
Yes. Did you say that you don't attend AGMs?
I don't attend AGMs. I don't attend AGMs.
Is it
I
because
am
you would be terrifying the company if you showed up at their AGM?
no. I invest in shares. I can't invest in shares, so I don't attend. I'm only a shareholder of SGX.
Right. Okay. For compliance
Yeah.
and conflict of interest reasons.
Yeah.
Got it. Well, earlier on, I was inviting you to snap this QR code and share your views with us on what it is that you feel about AGMs. Do you attend? What's the worst things about AGMs? And incidentally, please also add your questions and comments either by using the Q&A function in the here in Zoom, or you can also use Mentimeter. Once again, the screen share is here for you to quickly snap the QR code. The code on the left-hand side also appears in each of the slides. What do you think? Shall we have a look at some of the results? This is what you've said so far when we asked you what your preferred way of attending AGMs is. And good to see that quite a large number of you would say that you, well, in fact, that you would attend an AGM, whatever the format is, and only a very small number of you say that you wouldn't. If you are one of the people who voted the 4th ranked item here on the screen, maybe you'd like to drop a comment or question here in Zoom and tell us why. What is it that's keeping you from attending AGMs? And I see more votes are coming in. Please keep them coming. June, can you firstly update us on what the status actually is on virtual events?
Okay, yeah, sure. As you know, the COVID order will last, and it has been announced that for meetings that are the COVID order will be revoked with effect from 1st July 2023. So between now till 30th June, companies can hold general meetings virtually. But after 1st July, we are going to send guidance with regards to general meeting. We would expect to return to normalcy, meaning you would have physical meetings. In the interim between now to 30th June, companies can still hold. I will hold my comments, except to say that returning to physical, it's definitely encouraged, because that's where you have face-to-face interaction with boards and auditors and audit committees.
Mark, you're on mute.
Sorry about that. What is the view from the director's side?
Yeah, actually, I thought this table was very interesting because there have been fairly vocal shareholders who want to go back to physical, but we see from this feedback so far that the shareholders' preferred route is actually virtual. Of course, hybrid can be the best of both worlds, but anecdotally, if you ask directors to, what's this table on the screen?
Yes.
That's appearing on the screen. So,
okay.
Where you have feedback from the poll showing that most shareholders prefer a virtual AGM, and then secondly, a hybrid AGM. Only thirdly would be a physical in-person only AGM. I guess the advantages of a virtual is that the enterprising shareholder can attend many in the same day, because we have never really solved the clustering problem, right? where you have a lot of AGMs being held in the last few days of each financial reporting period. And so when you have a few AGMs in one day, technically you can open up different screens and have different AGMs going on at the same time. You know, I've heard of one shareholder who does that. So he can attend 3 AGMs at the same time, even though they are run concurrently. And he can submit questions on each, copy and paste questions. So I mean, that's quite useful. So from a director standpoint, I think the more flexibility, the better, rather than having to shoehorn AGMs into whether it's physical or hybrid or virtual. We should actually give as much flexibility as possible, especially if the virtual AGMs enable overseas shareholders to also take part, and a physical one will not be. I think it's very difficult to enforce a hybrid, to say everyone must do a hybrid, even though everyone acknowledges that the hybrid version is probably the best of both worlds for everyone. But it's difficult to manage in the sense that it's difficult to moderate one. I think only someone with the skills of Mark can moderate a physical question and then a virtual hand being raised on the same point, right? It's so difficult to moderate a hybrid AGM.
But it is possible, Adrian.
It is possible.
It is possible.
With a training, SIAS should all training sessions, or maybe SID should, right?
Call me, we can take care of that. But Hao-Yao, I do want to also ask you, firstly, are you the person Adrian referred to who watches 3 AGMs at the same time? What is the SIAS view on hybrid, virtual or physical?
Well, of course, you know, hybrid is obviously the best of both worlds. Preferably, I would like to attend physical, and if not, then the second choice is virtual, but virtual with interactive. In other words, not the one where you just listen to the directors answer pre-recorded questions and answers and then take a vote and then done, but really live questioning. And I think the only advantage for that is clustering, I suppose, and you can attend anywhere in the office or, you know, from the gym, if you were. But I like to attend physically because it's not just about asking questions. It's about meeting other shareholders, right? As I was saying, you can have your own group chat set up for that specific company, and you never know when you need it because they may have a corporate action, a takeover, or rights or something, and you may want to discuss it. And it's very useful right off the bat if you have everybody already on a chat. You also want to listen to what other questions other shareholders ask. You know, what areas are they interested in? Why are they interested in those areas? Maybe it's something you didn't think of, right? And so that's one thing, interaction with other shareholders. But you also get to interact with management and directors before and after the event. Oftentimes you can, if they stay around, a bit friendly, and more often than not, I think they do. Right. Also, one other important thing that you can't do virtually is that many of the SMEs hold it at their office, their factory, and you have the opportunities to kick the tires, to see the place, and you can have a different impression of the company. Yeah, and definitely don't go there for the food only.
Yes, yeah, we can talk about the food in a few moments. I do want to just address your question. I think it's Mr. Ng. Thank you for submitting this one. You're saying, I think this being a virtual meeting, the one that we're in at the moment, the pro-physical meeting people are not accurately represented in the results. Thank you for making that point. And I think you probably have a point there. You can see in the bottom right-hand corner of the screen as to how many of you have actually contributed to this poll, but we actually have 3 to 4 times that many viewers here tonight on this webcast. So if you have not yet cast your vote on this question, you can still do so. I'd also like to acknowledge your point, BB. You're writing, virtual AGMs held so far are not interactive or two-way. Shareholders are not able to ask questions spontaneously. Also, I guess, Hao-Yao, that's the point you were just making.
Yeah, and not only that, I think the earlier question was very good, that this is a virtual meeting. If it were physical, I would be who have spoken to many of you before the event and after the event, and answer more questions, or even listen to your views. And I'm sure you have plenty of interesting views. And it's just not so easy for us to do it. We have to type in a chat and come and maybe it's not so private, but and that's the loss of if we do things virtually.
Yes, indeed. All right, June. One other question that's being asked here by one of you, our viewers. Thank you for submitting this one. You're writing, companies are now only adopting physical in-person AGMs. Any possibility to make it mandatory to have a hybrid format, June?
Okay, if you look at even the feedback from the panelists, right, as well as investors, there are different preference there. We have heard from investors telling us that they prefer physical meetings, right? Then there are others that would want a hybrid, right? You have a physical and then you have the option to do virtual. And then of course, there are others that only want to do a virtual only. So for us, we need to, we are not going to prescribe the mode as yet, but we will need to listen to, in terms of feedback from the market, right? Whether it's institutional investors and retail investors. And someone in the audience correctly pointed out, you're not present. If you prefer physical meeting, then obviously the preference for virtual meeting would have been reflected by whoever is attending virtually. It's not easy, right? But I think for companies, one important consideration for them is also the shareholder base, right? Whether your shareholders are largely based overseas, and whether in terms of number of shareholders, do you have a very large shareholder, which then you may prefer a virtual meeting. But there are others that could, given because of the constitution, for example, they are prohibited, right, from holding physical meetings that are outside Singapore. So it is also important to give consideration to what is in their constitution. So for SGX, we will keep our ears open, and whether to prescribe, I'm not ready to say that we're going to prescribe hybrid meetings. We will have to get feedback from shareholders.
Thank you for that, June. Robson, anything that we've missed so far in this conversation from a legal perspective? You're on mute, sir.
We have covered, I think, broadly all the relevant issues, and there will never be the best answer. Some will prefer hybrid, some will prefer virtual, some will prefer physical. At the end of the day, I think in whatever format we have for the meeting, please attend. Make an attempt to ask questions in advance, as June has suggested, so that all these questions can be put on record and the responses would be announced, and addressed at the meeting. SIAS has also taken on for some time the role of asking questions based on annual report disclosures and the publications, and I think SIAS will continue to ask questions and raise this, and companies that refuse to answer questions, I think in due course SIAS will also make it clear those who are responsive and those who are not.
Yes.
And I think this is also one way that investors can follow through and basically raise questions as aggressively as possible, because ultimately collectively you are the owners of the company, and it's always proper for you to ask questions when in doubt, or when there are funny statements that just don't make sense, and even if they try to belittle you with silly answers or make you feel small, and you have the right to stand firm and ask your question and have them answered. So please ask your questions in advance, raise them, put it in writing, send it to the company. At the same time, look out for whatever responses that the company has to SIAS questions on the annual report. And then, at the end of the day, make an informed decision on your investment. I think that's important. In whatever format you have for the AGM, please attend them. Because as you say, at the end of the day, if you have a large number of shareholders scattered all over the world, then of course having the hybrid would be preferred. For those in Singapore, you can attend physically. those who can't make it, or those who have many AGMs, to attend on the same day, then of course hybrid would also be just as good. But please attend and ask questions.
And the hybrids are in fact catching up here in our online poll. Some more of your votes have come in. Please keep them coming. You see the Menti code there at the top of the screen. And by the way, there are a total of 5 questions that we're asking you. So after you've answered this one, make sure you go to the other 4 immediately after. Mr. Tan, thank you for this contribution. You're actually following on very nicely from what Robson just said. He says, I like virtual, but I've experienced a director answering a question that was totally irrelevant. And I also had experience where my question was completely ignored. Robson.
Well, I think if your questions are ignored, you can raise it, put it, if you want to capture attention, write to the forum page and say that, I am disappointed that a relevant question I've asked was completely ignored. Is there a good reason? And I'm sure if you have a very pertinent question and it's relevant to something that the company has done or not done, or that there's something funny going on, a special audit, I can't guarantee you the press will publish it, but at least you have made it known. And you can even send a question to SIAS and say, look, could you take this up, or perhaps even copy that to the regulator and put pressure and make sure that is made known to the company, that you are copying this question for the attention of SIAS and the regulator and all and sundry. And I think then they will probably take a second look at your question and decide whether they should maintain radio silence.
Yes.
Yeah, I think Robson, you're right. Yeah, if it's a material question pertaining to the company, it would help that you can direct those questions to us. But SIA's question is not 3 questions. It was 3 questions with many parts. So if you look at it, right, they are actually very detailed, and we support and we will always encourage or ask listed issuers to answer SIAS questions. In fact, we do take into consideration, right, for listed issuers that are very responsive to SIAS questions, we will in a way give them a carrot, meaning for the purpose of SGX has a fast track program. So the fast track, is just like in banking, your premier banking customers, private banking customers. For SGX, that concept is in terms of companies on the fast track, meaning they have a very good compliance track record. They are endorsed by investor bodies in terms of their governance standards, in terms of engaging shareholders. So we will give them a little price for engaging investors. And what is that little price? If you're on the fast track, meaning your submissions, we will drop everything, put you on the fast queue. So there is an advantage being responsive to SIA's question.
All right.
I'd like to add something though. Aside from just attending AGM, which many of my other panelists stress that you should attend AGMs, but some people can't attend AGMs. They're at work, or they're away. So I think it's not just by attending, but if you want, you can ask your questions beforehand. And even if you have no questions, now the CG code requires companies to take good minutes. And there's a requirement that they have to publish these minutes. So even if you're not there, read the minutes, and it's as good as if you were there.
Awesome. Well, that brings me to our next poll question. By the way, currently with 41 of you having voted, virtual still beats, but there has been a little bit of movement in the number for each of these categories. Let's go to the next question, and we'll return to independent directors and directors picking and choosing. The question we asked you, what is the worst thing about attending AGMs? And I asked you to formulate that in 1 to 3 words. Have a quick look at what you've written here. Car park. Well, that's something I hadn't expected to see in the word cloud this evening. But let's see. The worst thing, shareholders not queuing. I see. So it's a little bit like a budget airline flight. Everybody rushes forward. There's no worse thing in attending. Okay. Registration process, weekday. Well, perhaps Hao Yao, that's what you were referring to, right? You've got to work. scripted replies, brushing aside questions. Mr. Tan, you also wrote, directors can pick questions to answer for virtual meetings. I guess that's always something to come through. Evading questions, irrelevant questions, esoteric questions, questions poorly addressed. Thank you. Keep those answers coming. Fighting for food. Goodness, have you ever seen something like that? A food fight? Robson, no?
I will ignore it.
Nice. Well, you know, June, I spoke recently with a head of investor relations who was saying that, you know, that the food continues to be one of the big issues. In 1 year, they catered and shareholders showed up with their Tupperware to fill up the meals for the next 3 days. So the next year, they decided not to cater food in that form. They offered bentos instead, only to find that shareholders will then taking multiple bentos, putting them into their box and taking them home. So the following year, they decided to give fast food vouchers, only to find there that shareholders were fighting over the fast food vouchers and possibly making a greater return in dollar value from the vouchers than they'd actually invested in the stock. And so ultimately, they decided not to have any food at all, only to then find that the hotel where they had staged their AGM in a ballroom then sent them an extra bill, and they couldn't figure out why. We've already paid for using the venue for the AGM. And then the hotel said, well, as a result of you not paying for any food, shareholders then helped themselves to cups, saucers, plates, cutlery, and anything else that wasn't bedded down. So, June, any help on this issue of fighting for food?
Well, I must say that that doesn't come within our regulatory ambit. It is for board to decide how they would, whether they're going to provide food, vouchers, or bento set. We don't regulate that.
Maybe you should. Robson, what are your thoughts?
Well, I think we are more focused on food for thought. And serious investors should not take AGM as a buffet or free buffet or an opportunity to cater food for your friends and all that stuff. So I think these things will eventually not be the main focus, and certainly regulators will not be bothered. But I mean, I have not seen this for a long time. I think now investors who attend AGMs are serious investors. They want questions to be answered because they are genuinely concerned about their investments. So I think it's just one of those small little things that would happen from time to time, but I wouldn't take it seriously as a main issue for AGMs.
You've raised this earlier, Hao Yao, and CB, you've kindly added this question here in the Zoom Q&A. You've written, retail investors like us have only one chance to meet companies once a year at the AGM, but many AGMs are held during office hours, which is difficult. Can companies set aside another day to meet shareholders?
Yes, I mean, SIAS sometimes has pre-AGM events. We also hold virtual conversation sessions, and those are in the evenings. I've moderated some myself. So I think there are also other avenues. They have investor fairs and such. So AGMs aren't the only avenues, but yes, it is a nice avenue because all the directors are there. And on the food question, I rarely eat at AGMs because I like to spend my time. It's an important venue, as you pointed out. So I spend my time either talking to the directors, the other shareholders, and such. And usually by that time the food is gone. So food is not that important. I think there are much more valuable things that are there. Looking maybe company tours and such. If I may answer the question, sure. One of the worst things at AGM would be unprepared questions. I mean, some shareholders just, I don't know, like the sound of their voice, and they're not really listening. And the companies sometimes already covered the points in their presentation or in the previous answers, and shareholders just go up and ask the same thing again. So I think as I said, and Mr. Tan also said, it's a very, very valuable venue with valuable time. You also don't waste the other shareholders' time by just being not prepared. And some people just ask such general questions like, what does your company do? You know, and so that's not valuable use of other people's time as well. And I think we should all do our homework so that all of us, you know, get a very rich AGM session that we all have many takeaways. After all, it is bread and butter, it's dollars and cents, you know, so don't waste the time.
Adrian, you also wanted to point out the SIAS guide on the whole food issue. I can't believe we're spending so much time on that.
I feel that food is becoming less of an issue. And although many years ago, when the whole board was in upfront on the race stage, and then we could see that the food was being brought out. It was shocking. It was like the Red Sea was parting, because half the room just stood up and went back to the back of the room. So, but honestly, I think shareholders are very intelligent. They can tell very quickly whether the board is serious in engaging with them. You can tell from the setup of the AGM. Is it in Tuas or Jurong at the company's office, or is it in a very central location? Is it it's a good time? Some companies even provide transport, and some companies want shareholders to come, so they provide door gifts. Quite a few of my companies do that. The desire for companies to genuinely engage with shareholders is there, and those companies that would rather treat the AGM as a painful injection or something that needs to be done away with or completed as quickly as possible, I think getting fewer and fewer. So I've chaired about 3 boards over the years, and the types of shareholders I really like to see are those that come early, and the directors will be milling about. So I used to actually be on first names basis with some of shareholders, mostly retirees who bothered to come up to say, hey, Mr. Chan, you know, I may not have the time to ask you this question, but can you answer? I'm happy to engage with them. You know, so if you can develop a relationship with the directors outside the formalities of the AGM, is even better still. So I would call on these people. I see a friendly face in the audience. I will call on them. I know they would be respectful. They would be most people want to ask. And then I would really want to actually share more as much as possible. So I would say EQ is very important in dealing with the board, and being respectful. And this is a good place for me to sell a bit of Koyo that, you know, we have done a wonderful best practice guide dealing with what people should or should not. SIAS, SID, and SGX. So the 3 parties here have jointly issued this guide in 2019. It's on the SIAS website. And so this guide is useful because you can hold boards to that standard, and that's a high standard. But shareholders should be held to that same standard, right? Be respectful, don't say silly things, and give directors time to respond. And if chairmen are evasive, pin them down. You can actually flip out that best practice guide to say, the SGX says on clause 2.1 of this guide or whatever it is that you should have that answer ready. And if you can't, this is my email address. Can you kindly get back to me, right? Because not many companies do investor days. It's only the larger companies actually have investor really. You know, so for example, I used to sit on the board of Yoma, and one thing I thought that Yoma did very well is the business was completely in Myanmar, but they would organize shareholder trips to Myanmar. And Myanmar is a difficult country to get around with. It's not entirely safe, difficult language issues. So they're not in the tour agency business, but they would actually have about 50 or so shareholders brought to Myanmar, tour all the company properties, meet the business heads, and then see the sights of Yangon. And that was very popular for many, many years until the military took over. Then that put an end to it.
Yes, but what we're seeing here on screen also is just how much investors actually really want answers, right? You can see that here, food and door gifts is really at the end. Honest and transparent answers. You say that you can actually email the question, but as one of, I think Mr. Ng, you wrote this one again, you're saying, are listed companies required to answer our emails, asking straightforward things like why they've suddenly omitted certain info. Recently, I emailed, you're saying, Mr. Ng, but they don't respond at all, not even an acknowledgement, Adrian.
Yeah, that's a shame. So if, you know, in the annual report, they should have an investor relations contact in the corporate governance report. So you should be able to contact all listed companies. That's, you know, that's something that you should be entitled to, and your email should be answered. So I think you should raise it maybe in a whistleblowing thing to the exchange, or raise it verbally at the AGM, so that other shareholders with similar experiences can raise their hand and say, hey, this happened to me too, Chairman. What are you going to do about it?
Okay,
Make them accountable.
Thank you, Adrian. June, another question here. I also noted that some directors do not attend AGMs. Thank you for asking this one. June, is it compulsory?
It is set out in the code under the principles that board should engage. Board of directors have to be present at general meetings, right? Otherwise, there's actually no way, for example, like if you look at audit committee with direct financial oversight, they will be able to address questions. Yes, to answer that question, yes, directors will have to attend general meetings.
Okay. Any other points here that you're seeing? Robson, Hao Yao, Adrian, June, on this chart, anything that leaps out at you from this?
Well, I think shareholders are getting more sensible and certainly more sophisticated. I mean, it's big positive phenomenon of shareholder activism in the constructive way. You want honest, transparent answers and not flippant, cosmetic responses, and then you try to placate and feed people well and give them dog gifts or what have you. So I think it's an emergence, it's a positive development for the Singapore market, and I think this should continue. And at the end of the day, shareholders want responsible board members and not people who are just collecting directorships or are too busy to really put their minds to the company's development, operations, and future prospects, which I think shareholders want to know, because ultimately they are shareholders, they are owners of the company, and directors are duty bound to make sure that they run the company properly and answer questions which are definitely relevant. Of course, you have the odd one out who asks silly questions, but I guess you can manage it, and you should be able to manage it. So I see a very healthy sign in this latest data that you are now sharing screen with us.
Yeah, maybe Mark, I can just jump in on this slide, and speaking from the perspective of a director trying to answer questions at the AGM, one thing we like is if the shareholder can be structured. If the chairman calls on the shareholder to ask this question, with that shareholder say, I have 3 questions, Chairman. Number 1, number 2, number 3, right? So very nice. If he asks one question and then the chairman is going to other shareholders, and then you raise your hand again, it shows that it's difficult for the chairman to keep coming back to you. So if you can get all your questions out in a structured way, that will be very helpful in time management, because we know that number 4 is having a short meeting. So the chairman needs to be a good time manager as well. But the other thing I wanted to mention is we are seeing more and more companies actually giving presentations before opening it up to the floor. I think that's a good exercise, and we should encourage more companies to do that, and especially very nice PowerPoint slides with charts, and having more insights in that deck. And it's good that companies be encouraged to share that deck actually ahead of the AGM, so that shareholders don't see it for the first time, so they may not be able to process that information and ask that question on the spot. So ideally, I would like to see companies prepare that deck, release it 2 or 3 days before the AGM. Shareholders can then digest this and then ask the relevant questions at the AGM itself.
Good. Any other? Howie?
If I could just say, well, just something along the lines of what Adrian said. I think it will save a lot of time at AGMs if companies, for example, answer right up front or give a presentation about their dividend policy, so that there won't be like 20 questions literally about the same item. I think dividends obviously is a very important part of investing, and so companies should have a dividend policy. If not, please do ask them why they don't have one, rather than say, hey, why don't you increase your dividend, for example. So the company should give a kind of, aside from the policy, but give an explanation on what they intend to do with their funds and how do they intend to expand and so on and so forth. I mean, companies need to retain cash to expand. If the company is paying out more than they earn, I would be worried too. It's not just it's great to have the funds, but your share price will be declining, I think. Yeah. So we have to be reasonable as well. And you want the company to grow, and yet you want some dividends. So some kind of balance it should be found, and companies should be upfront and explain it early on. Then you will save time again. So like Adrian said, have a presentation or have a standard Q&A done. And companies should explain it well. If not, this is just going to be a perennial question.
Indeed, and some companies even borrow cash in order to pay out their profits as dividend, which seemingly still happens in some markets. One thing about the Chairman and CEO update is surprising, actually, how few companies provide that. As Mr. Tan, you wrote, boring and lengthy presentations are the worst things about AGMs. But perhaps that's more to do with the presentation style than whether or not you actually give one. Bibi, you're writing, most AGMs you've attended, the chairman restricts one question per shareholder, even though there are no other people asking further questions. Any reaction to that, Howie?
Well, definitely, I wouldn't agree to that. I think if a shareholder is asking too many questions and there are many other people in the room who would like to ask questions, then I think the chairman has every right to move on to other people besides people coming back to you. But one per shareholder, I think, is way too little, unless you're just going around the room. So each one asks one, then the next one, and maybe it comes back to you. Maybe that's not an unfair way of doing it. But typically, I would ask 2 or 3 questions at least, and then I will take a break, and if I have further questions, I'll ask it later. I think that's a fair way of running an AGM. I don't know, Adrian might have a view on this.
No, I absolutely agree with Hao Yao. He's a real old hand, and people should actually go to courses run by Hao Yao on how to ask questions at AGMs.
Okay, well, here's another one from Mr. Heng. Thank you for asking this one. And June, possibly one more for you. What are the roles of the independent directors? In the recent privatization or merger cases, I don't feel many of these independent directors are protecting shareholders. Is there a rule that SID or the regulator should investigate if it is glaring that these independent directors are not doing their jobs?
Okay, for independent directors, it is very clear that their role is to look at, make a recommendation, right, to shareholders as to whether or not to accept the offer. But this recommendation is based on an IF, independent financial advisor's opinion, right? The opinion would have to look at the terms of the offer, right, and to determine whether the terms of the offer are fair and reasonable. So that is in relation to a takeover offer, right? I wanted to take this opportunity to also highlight that where it is an offer, it does not mean that it has always got to be fair and reasonable. And if it is reasonable, if it is not fair but reasonable, then the opinion would have to be explained, right? But this is actually quite different from a delisting offer. A delisting offer where the company is proposing to delist from the exchange, and that is where the opinion from the independent financial advisor would have to be fair and reasonable, right? So in terms of shareholders, if you think that the offer does not meet your expectation despite the IFA opinion that is fair and reasonable, you exercise that right, and that right is not to accept the offer, right? So I wanted to take the opportunity to clarify the difference. A reasonable offer has a higher threshold because there are quantitative and qualitative aspects as opposed to a fair offer, which only takes into account the quantitative aspects in terms of the value of the securities.
There is actually a question here, June, from one of you, our guests this evening. You're writing, does the IFA provide value to investors? It's difficult to understand what is not fair but reasonable. Can you clarify?
Well, as I mentioned earlier, for reasonable, these are actually provisions under the takeover code, right? So if an offer is fair and reasonable, I guess that's what shareholders would like, right? Would be more amenable to accept the offer. Fair in relation to the market value of the offer. But if an offer, in terms of whether it's reasonable, it will have to look at other aspects, the qualitative aspects, in terms of whether the offer price, right, apart from the fact that it is attractive in dollar terms, it will have to look at other qualitative factors. Is there an offer on the table? How does it compare with what are the offer terms to the other privatization exercise? So it's worth looking at the guidance under the SIC code, but in short, if it is reasonable, it can be not fair but reasonable, right? It can also be fair situation where it is fair but not reasonable. So there are quite a few semantics, but essentially I'm trying to say that the fairness deals with the quantitative aspects, and the reasonable threshold is actually higher, right? Because it includes qualitative and quantitative aspects.
Okay. Well, we asked you this question as you logged in on the Menti code earlier this evening. What is the difference between the general offer and a delisting offer? And these are the answers that you gave earlier on. June, as you have a look through this.
A delisting of offer. Yeah, for general offers, if the offer in terms of acceptance, right, hit a 90% threshold, then it would depends on, it will be very clear as to when the offer is released as to whether the company can exercise the rights of compulsory acquisition. So if I give you an example recently, which is an offer by Bousted Holdings for Bousted project, that is a voluntary general offer, and in that case, there is a right of I think Adrian, you can jump in later if you want to, but it's the rights to exercise compulsory acquisition if acceptance from independent shareholders hit 90%. But in the case of Bousted Holdings, which is the holding company of Bousted project, the right of to exercise the compulsory acquisition is not there because there is a shareholder by the name Mr. Wong who holds 19% of the Bousted project. So the company can never exercise that rights of compulsory acquisition. So having said that, even though the company cannot exercise the rights of compulsory acquisition, in the event that the acceptance level, right, an IFA opinion was given, and an IFA opinion was that it is not fair but reasonable, but acceptance level creep up, and the company lost its free float. So it was suspended under our listing rules, and the companies will have to evaluate options. So for a general offer, as I explained earlier, it would have to, it can be fair and reasonable, right? It can also be not fair, but reasonable, right? But it cannot be reasonable, but not fair. So sorry if it sounds a bit complicated, but I was trying to explain the semantics in terms of fair and reasonable. But a delisting offer is different. After a company reaches, for example, a 90% acceptance level, right, and it loses its free float, then the prerogative is with the offeror. Does the offeror intend to restore the free float and continue the listing status, right? Continue the listing status. So the offeror's intention is normally clearly stated. If the offeror intends to privatize, then it would not restore the free float. But there are other situations if the offeror intends to restore the free float, it will have to make sure that the free float, at least 10%, is in the hands of public shareholders. So the intention to delist would mean that it is a delisting offer for which you would need the IFA opinion that the offer is fair and reasonable.
Yeah, Mark, actually, this is a really complicated and difficult area that is confusing even for lawyers. So June has explained it very clearly and very lucidly. And Robson is the expert here, really. But I just wanted to say that IDs, independent directors, sometimes get the short end of the stick because they're not at fault. They just rely on the IFA's opinion. And it's very rare that independent directors have the courage to disagree with the IFA. So if the IFA says they recommend acceptance or they recommend rejection, usually independent directors will just go along with it. But it's the IFAs that we actually may need to hold a bit more accountable and to have clearer opinions in a more readable form. And I don't know whether there's any scope for regulating IFAs a bit more closely, but I will actually leave it to Robson to chime in. Yeah.
Okay, hi. I think let's look at Bousted. It's a very different kind of offer vis-a-vis the typical takeover offers. Bousted Singapore is a listed company. Bousted Project is its subsidiary. So in Bousted's case, instead of the usual controlling shareholder setting up an SPV, a special purpose vehicle, to acquire shares, and that people who are acting in concert, they say, look, we are also accepting the offer. The SPV at the point of the takeover has 0 shares, right? And therefore, it's easier once people who are closely associated with the SPV accepts it. Then you can cross the 90% very quickly under Section 215 of the Companies Act. So you can exercise compulsory acquisition, meaning to say once you have crossed 90% of shares that you did not own and 0 shares right at the start. Therefore, it's very easy to cross 90% of the so-called 90% threshold, and you exercise compulsory acquisition. And once it's wholly owned by the SPV and its concert parties, then of course, the result is the company would have to be privatized, so to speak, compared to Bousted Singapore. So Bousted Singapore holds a huge stake in Bousted Project, right? And right at the start, they use Bousted Singapore to do the takeover. So you don't fall within the SPV structure that most people usually conceptualize a takeover. And that's why they're upset that they can't exercise Section 215 compulsory acquisition, coupled with the fact that this Mr. Wong, he is a 40-odd% shareholder in Bousted Singapore. Also owns 19-point-something% in Bousted Project, and he has clearly said, I'm not going to accept it. And for even if he says he has to accept, he wants to accept the offer, Bousted Singapore would have to do an IPT EGM in order to acquire, because presumably his 19-point-something% would easily cross 5% of the group NTA of Bousted Singapore. So there were issues that were raised, I think, in Cao Bao, but I'm not sure how many people read Cao Bao. But it has been explained that he's an interested person. So that's why they didn't go through that route and exercise compulsory acquisition. But in Bastard Project's case, what happened was the public float dropped below 10%. And I think they have stated very clearly that they are not willing to do a compliance placement. But SGX has also made its position clear. Either you do a compliance placement, or you do a delisting offer, which is fair and reasonable in accordance with 1309 of the listing rules. Yeah, 1309, I believe. So that is the position. The so-called issue of some concern is, what do you mean by not fair but reasonable? So it has a certain meaning in a different context. In a typical takeover, I think SIC in its practice direction has made it very clear. You can have four permutations, of which what is not acceptable is if it's fair but not reasonable. SIC would not agree to that. So you can have a fair, not fair but reasonable. That's fine. That's fine. Fair and reasonable, of course, is very clear. And then, of course, not fair, not reasonable. Then, of course, you definitely cannot recommend. So I think the key lies in the IFA report, right? Because from the IFA's recommendation, the so-called non-interested or the independent directors who are independent of the offer can make a recommendation. So it's not just IDs, it's directors who are independent of the offer. So in Bastard Project's case, SS Wong is clearly not a director independent of the offer. So what happened is there are two issues here. People are asking, what do you mean by all this terminology? This terminology is not carved out by SIC on its own. They have adopted this permutation from the CT code. So it's not something that's created from the air by SIC, no. There could be grounds for raising some feedback to the market regulator, and here I'm referring to MAS, whether they can simplify and explain what exactly the IFA should do in making the recommendation to accept or not to accept, and explain it more clearly rather than hide behind nebulous phrases like not fair but reasonable and all that, because I think there has to be some certainty, not just to people who understand the terminology or even professionals or regulator, but the man in the street, market investors, mums and pups. SGX position is very clear. You want to delist, 1309 has to be observed, fair and reasonable, and the IFA has to give that opinion. Oh. So I think this is where all these issues got thrown up. And it's not just a typical takeover of equities. I think earlier I think last year, you have a number of REITs who did a lot of mergers via schemes of arrangements. You have IFAs as well who basically gave an opinion, and people were also unhappy because ultimately people feel that, was there a low ball offer? Are there thinly veiled threats issued subtly to say, well, the company is going to be suspended? You have no market, no one's going to give you a better price, so you better accept now. You're only just holding a few $1,000s, you better realize your investment. So I think, of course, it's open to the offerer to persuade shareholders to accept. Ultimately, this is a fair, open market. Perhaps there could be further directions from the regulator as to the kind of standards expected of the IFA report. And also an equally important issue is the independence of the IFA once they're appointed, and what directors who are independent of the offer should do or should not do in making a recommendation, whether to accept or not to accept. I think there should be more clarity to remove doubts about what exactly you mean by phrases like not fair but reasonable and all that stuff, right? And then basically hold it to the IFA or put it down to the IFA. Please, when you recommend to accept, set out your basis and justification for making a recommendation, whether to recommend yes or no. Directors as well, directors who are independent of the offer, please also make sure that you are able to withstand scrutiny and not basically like another mouthpiece of the offeror, because ultimately your arms are in a way constrained because for whatever reason. So I think the independence of the directors who make the recommendation, independence of the IFA in once they are appointed, you owe a duty to stakeholders, not just to the person who appointed you. And secondly, to remove perhaps or to clarify some of these rather vague phrases which people do not understand. What do you mean by such phrases? Permutation. It's like, so, when for example, the regulator appoints someone to hold a CMS license, capital market services license, it must be fit and proper. So you don't split the hairs and say you're not fit but proper, or you're fit but not proper, right? I mean, so I think there's some basis for and I hope regulators, market regulator, will look into some of this feedback from the ground. And hopefully there could be further clarity down the road. But I think SGX is very firm. And that's actually to protect shareholders who might feel that they are under some form of threat that, you'll be delisted, and delisted means you have no market. Or I think SGX says, no, you better, under our rules, you got to have fair and reasonable and opined by an IFA. So I think there are a lot of issues. Bousted is one of them. I think recently there is an Indonesian company called GER, I think, because they were dividend out shares, which they say are the industry and the company that belongs to industry that they don't want to be associated with anymore. But again, the portfolio of the company involved a listed company in Australia that was trading at rocket sky high prices. Was that taken into consideration by the IFA? I think these are issues that were also raised and ventilated in the press. So I think Singapore market has come of age. I think SGX is doing its best to protect investors. MAS is also, I believe, is watching what's happening, and hopefully there'll be further clarity, and so that we can not only have the integrity of the market, but confidence of the retail investors that there is clarity, there's independence, and that a recommendation is made not flippantly, but there's a basis. Of course, you can never get full NTA of the company, because full NTA means the company, you're going to unwind the company and sell it, right? It's a going concern. So I don't think you can look at NTA and say that, oh, that's the benchmark and it's cast in stone. I think there are many, as what Jun said, there are many, in a reasonable situation, you have both quantitative and qualitative. So investors, you should learn to read the IFA report, not just say, I look at the price too low. I came in at $3, now they are offering 120. Well, that's historical, right?
Okay, thank you. Well prosecuted, Robson. Incidentally, we have lots of additional questions and only 10 minutes until we wrap. So let's see that we can go through the speed round with responses. June, firstly, any response to what Robson was saying? Fit and proper,
Yeah,
unfit
we
and
will
proper.
look at how we can provide further guidance on IFA. As I said earlier, I think it's important for investors to understand the difference between the two concepts of fair and reasonable, so that you don't always expect that every general offer has to be fair and reasonable, because there is actually room for different permutation, right? I think it would suffice to say that as far as the listing rules are concerned, given the example that we have, if the company cannot comply with our free float, they have to ask for time extension to evaluate, right? To evaluate options as to how they would comply. And the listings can only happen if they have a fair and reasonable offer. So that's all I have to say. Be very careful about the differences in the terminology. They are very clearly set out in SIC's guidance, and I will not repeat what I've just explained earlier.
Thank you. But I do have another question here for you as we head into just the final Q&A. This one is about Eagle Hospitality REIT. Mr. Chow, thank you for your contribution. You're asking, what can IPO shareholders do to recover? And actually quite a number of questions reached us on Eagle. Here's another one on the screen. Yep, and June, would you like to just give us your view on all of the questions on Eagle Hospitality REIT?
Okay, I think this is already covered in MAS enforcement report. For Eagle, the investigation takes time, right? The authorities have in fact seized the records because it involved a lot of documents, and assistance is also required from regulators, foreign authorities. So for Eagle, if there are breaches of the disclosure requirements in the prospectus, if there are breaches of disclosure requirements on a continuing basis, then this matter has already been referred to the MAS, and MAS has already updated that they are looking at it, so it is in progress. I wouldn't be able to comment beyond what MAS has said. The delay is, as mentioned, is because of the extensive documentation and the fact that assistance is required from foreign authorities.
Okay. Would you care, though, to add some thoughts on this particular point here about recovering losses for investors in cases of negligence or misconduct?
I think they can be subject to fines, but I don't know about recovering losses because directors are subject to fiduciary duties. So fines can be imposed. I am unable to comment because that is still under investigation.
Thank you for that. Let's see that we can take some more. Here's a question in relation to what happens after delisting. Mr. Teng, good evening. You're asking, what can investors do after the company is delisted? How can investors then, quote unquote, sell their shares if desired later on? Any takers?
I can jump in. If the company has been delisted and you're stuck holding shares in a private company, it's very tough, right? You have no ready market and no one's obliged to buy your shares from you. So you basically have to sit tight and keep engaging the board. You still have the right to attend AGMs, to ask questions and to get dividends if they are declared, but very little rights because you have ceased to enjoy the protections afforded by the SGX listing rules. Once you're, so it's always very tough to be holding shares in a private company.
Thank you, Adrian. Very useful.
Yeah,
Jasmine,
I would like
hello.
to chime in. Perhaps
Yes,
I can
Adrian.
chime in on that. Sure. I'd like to chime in because I also have a box of scripts from the listed companies. So I think shareholders have to understand there's a big difference between listed and unlisted shares. Because listed, you have all the protection of the exchange, you know, the MAS rulings, the bylaws, the CG code, SIAS, for example. But once you're delisted, it's like starting your own company and registering yourself. It's a private limited. So you don't have any regular reports. You get your financial statements at the end of the year if you're lucky and the company files. Other than that, you may not even hear from the company forever, or at least it feels like forever. Right. Very few cases where I've held the shares after the listing do I actually get a value better than the takeover price. I'm not saying it's impossible, but in very few cases I did. Hence, I still hold envelopes full of the listed shares. Yeah, that's my only advice, sharing it from my experience.
Yes.
Can I chime in here? Yeah, can I chime in here? I think that's why SGX is firm in setting the threshold for delisting at a higher level than a normal takeover. And that's why the offer must be fair and the IFA must opine so. So knowing the consequences as how Yap had explained to you, you hold a box of share scripts that basically, you know, unless you want to go on minority or all that, which is going to be, if you are holding 1,000 shares, then forget it, don't waste your money. And you fight on the company, and they can do a lot of funny things, a lot of restructuring, and you could be holding shares in a company that basically is quite worthless. Right. Because they could have taken the business out of the original company and so on and so forth. So I think that's why kudos to SGX. They are very firm in making sure that if you want to delist or exit offer, you got to fulfill fair and reasonable tests. Okay. And that's why you have that different standards, so to speak. And I think shareholders should appreciate the position of SGX.
Mr. Teng, I hope that you're okay with whatever the investments are that you've made and that you get your money out. I do want to make sure that we honor as many of you and your questions this evening. Jasmine, you're asking about a mandatory general offer. Does it mean that shareholders must submit their shares when a company makes a mandatory general offer? How are you?
Well, I'm not the perfect guy on this panel to answer, but I think mandatory means the company, the offerer had to make the offer because they breached a certain shareholding limit. Yeah, that's mandatory. Yeah, I think Adrian may have a better definition for that.
Oh, yeah. Absolutely right. So the word mandatory refers to the offeror's obligation to make the offer so that you're given an option to sell your shares if you want to. You are never forced to sell your shares in a mandatory general offer unless there's a compulsory acquisition process that kicks in at the end and they've acquired 90% of the shares.
Good.
So yeah.
Good. Thank you for that. Mr. Tan, this one's one for you, June. Thank you, Mr. Tan. You're asking, SGX could influence companies to have a good management practice of making passions available on their websites a few days prior to the AGM. June, are you going to weigh in on this?
We will not prescribe that they have to do it, but companies in practice, they can release their slides via SGXnet, but that is provided that it isn't the slides isn't the forum to release very material information without explaining to shareholders. So it explained why in practice a lot of companies they engage shareholders at the meeting. At the same time, they present the PowerPoint slides. After that, then they release the PowerPoint slides because they're important points that need to be emphasized. There's nothing in the rules to encourage or to disallow a company from releasing their PowerPoint slides. So companies, shareholders can ask, right? But I think that companies don't do that because in practice is because the PowerPoint slides contain a lot of information that needs to be explained. But I can understand that from the perspective that you want to read it first, right? Before, so that you have an opportunity to ask questions.
Good. Thank you, June.
If I may just add a quick point that I think anything that's material should be immediately announced. And if your slides contain material information that you want to share with the general meeting, I think the best practice is to call for a trading halt and then have that meeting over, then immediately release it on SGXnet. Alternatively, it's just highlighting points that have already been raised in the annual report and you're confident that there's nothing inside there that has not been announced to the market, then you won't run foul of your disclosure obligation. So there is, the slides per se is not the real issue. The issue is, are you disclosing material information while market is still trading during your AGM? I think that's where I often would remind the board, so don't be too creative because your IR team come up with something and then you disclose something while market is still trading and your AGM is now having a heated discussion on some of these points which the market is unaware and people are trading on it. Are trading without this information. So I think these are points that it should be relevant to raise.
Good, thank you. Very, very useful. Thank you for that. Bibi, to be fair for both the company and shareholders, is there a minimum and maximum duration for an AGM? Many virtual AGMs ended within 15 minutes. Any thoughts, June? June?
Hi, sorry, I got choked.
Okay, maybe
AGM should not be so short. Hold on.
Sure. Maybe we can invite Robson to respond.
I think there's, certainly if you want to have a meaningful engagement with shareholders, you don't rush through. I've seen during the COVID period where the meeting ended in 10 minutes because, there was just not enough avenue, and people, it was new to many people, virtual AGMs and all that. We are past that phase. I think to have a meaningful meeting, whether virtual, hybrid, or whatever, it must be adequate to address questions and queries from shareholders, not just to read out the usual business of the set out in the agenda and pass the resolution, because now it's all electronic voting. So adequate time, and I'm not sure SGX wants to regulate that. And I mean, it all depends on whether is this a growing phenomenon that people are basically rushing it like rocket speed.
I think that can only happen, if I can jump in, that can only happen if shareholders are not asking any questions. So when board go through the resolutions, it's passed, right? In 15 minutes, because no one is asking any questions. I wanted to go back to the point that Robson mentioned earlier about selective disclosures. Companies should also make sure that they do not disclose material information on a selective basis, be it to media or to a group of shareholders. So information must be disseminated via SGXNet, right? So I haven't heard of AGM that finished in 15 minutes, but as I said, it's because there's no question from the audience. So resolutions just get passed.
Well, I think the point here is that there were actually no channels for shareholders to ask questions.
I think during the COVID period where it was new virtual and questions basically, I'm not sure how, but I've attended one or two of such meetings. They ended in 10 minutes. Yes, but I think that should pass, and I don't think the board, there's any basis for the board to have such a short meeting, particularly if there are a lot of questions from shareholders, and then they just shut people off and say, well, we don't have time or we run out of time. I think that's nonsensical. Certainly, if this issue comes up, I think shareholders should raise this publicly and with the regulator, and I'm sure the regulator will ask why. Why are you not giving shareholders an opportunity to ask questions and to have proper responses?
Well,
so if it's a rush through job, I don't think that's going to fly.
Indeed. And over the last hour and a half, we've given you the opportunity to ask some questions. We are into encore time. So just to keep this fairly brief, here's another question for you. Thank you. You're writing, what about matters relating to those listed companies that have been suspended for quite some years? Is there anything that shareholders, SGX or SIAS can do? June.
Okay, for companies that have been suspended, I'm quite sure you're referring to those which could be under judicial management. There are also others that are in the process where they are supposed to submit a resumption proposals. So we have been granting extension. In fact, strictly under the rules, if a company does not submit a resumption proposal, the entire time frame is about 12 plus 6 months, which is 18 months. So we would give companies an opportunity, grant extension, but after X number of years, if the company continuously get extension, but there's no progress, then we will have to delete such companies. So suspended companies are very challenging because if it is under judicial management, the judicial manager would have to look for a proposal, and that could involve injecting a new business. But very often in practice, right, there are extensions of time that have been given, but there are no conclusive proposals. Then we will have to pull the plug, right, in terms of delisting the company. So it all depends on the status. But there is also another group of companies where they are suspended because it is undergoing special audit, right, a review of certain matters. It could be financial irregularities. It could be pertaining to transactions. It could be pertaining to transactions that stretch across a few years, right? And across, and if those transactions involve multiple jurisdictions, then that process in terms of the special audit could take some time, right? So we are not just going to nip it on the bud and immediately delist those companies, because we need to make sure that investors are provided with information to enable, to make sure that there's clarity in the state of affairs, as well as the findings of the special auditors. So it can happen in practice, especially those under judicial management.
We are fast running out of time. So just to wrap up on perhaps a lighter note, Adrian, you mentioned earlier that Yoma Strategic Chairman Serge Pan like to fly shareholders to Myanmar, to Yangon to see the operations for themselves. Well, Mr. Ng, you've provided fodder for this last question. You're writing Dairy Farm International AGM was held in the Bermuda Islands. You're asking, perhaps rhetorically, who who's going to fly to the small Pacific island to attend. Adrian, final words. Where do we go from here on all of the matters that we've talked
Well,
about?
if it were virtual, hopefully you get a virtual tour of the Bermudas. I've never been there myself, but I'm sure it'll be a lot nicer than visiting Myanmar. So hopefully it's a mix, right? You can do a hybrid AGM, and those shareholders who are actually lucky enough to get a seat on a flight there can also rub shoulders with shareholders who participate virtually.
Indeed. Thank you all for attending this evening. Robson Lee, Adrian Chan, Ang Hao Yao, and June Sim. Thank you for joining us from home. Please complete the feedback form. The QR code is being flashed here on the screen, or rather the details. As soon as we log off, you'll be able to complete that form. Please let us know how we did. Have a wonderful evening, and we look forward to seeing you again soon. Good night.
Good night. Thank you.
Thank
Bye.
you, everyone. Thank
Thank
you.
you.